Have you ever wondered why the stock market seems so unpredictable? And why even the smartest financial experts often fail to beat it? What if the secret to lasting wealth wasn't about stock picking or timing the market, but about understanding the powerful, data-backed truth behind Wall Street's biggest illusion? Welcome to Trade Investor. Today, we break down the groundbreaking classic, A Random Walk Down Wall Street by Burton G. Malkiel, chapter by chapter, with rich insights, practical data, and actionable strategies for every retail investor. Stay tuned. This might change the way you invest forever. Introduction: The legacy of A Random Walk. Burton Malkiel's timeless work demystifies the stock market with a clear message. Most attempts to outthink the market are futile. Malkiel, a respected economist, brings together decades of market history, behavioral science, and practical investment wisdom. His central claim: a blindfolded monkey throwing darts at the financial pages could select a portfolio that would do just as well as one carefully picked by experts. Through this journey, you'll discover why embracing simplicity, patience, and data-driven strategies is your ultimate edge. Part 1. The Theories of Investing. Chapter 1. 2 Ways to Value Stocks. Malkiel introduces Firm Foundation Theory. Stocks have an intrinsic value based on future earnings and dividends. Castle in their theory. Stocks are valued according to popular sentiment and crowd psychology. Indian insight. Indian retail investors are often swayed by market fads, rumors, or social media hype. Castle in there. Persistent wins are more likely from assessing a company's fundamentals, like profits, management, and sector prospects. Don't chase the latest multi-bagger tip blindly. Chapter 2. Booms, Busts, and Bubbles in History. From tulip mania to the dot-com bubble, irrational exuberance has led to spectacular crashes. Indian insight. Indian markets have seen their booms, Harshad Mehta, IT, real estate, and busts, 2008 crash, COVID plunge. Before joining any bull run, ask if you're buying into hype or solid growth. Defensive investors should be wary of sectors showing parabolic price moves. Part 2. Tools and Tactics. Why most investors lose. Chapter 3. Technical Analysis and the Castle in there. Malkiel shows that technical analysis, using charts and patterns, often fails to deliver durable outperformance. Indian insight. While technical trading is popular in India, especially among young traders and on social media, data suggests long-term wealth is rarely built this way. Use technicals only as a supporting tool. Always ground buying decisions in sound financial logic. Chapter 4. Fundamental Analysis and the Firm Foundation. Even careful stock evaluation can't guarantee high returns, as future company performance is difficult to forecast. Indian insight. Indian retail investors should look beyond hot numbers or annual reports. Seek consistent profit growth, strong promoters, and sectors with long-term relevance, example banking, FMCG, IT. Avoid betting heavily on speculative small caps unless you can afford the risk. Part 3. Modern Portfolio Theories. Chapter 5. The Efficient Market Hypothesis, EMH. Market prices quickly reflect all available information, making it nearly impossible to consistently beat broad indices. Indian insight. Rather than seeking the next big tip, most Indian investors will find better long-term results by investing regularly in Nifty Sensex index funds or ETFs, outperforming most actively managed mutual funds, especially after costs. Chapter 6. The Random Walk Theory. Stock price moves are essentially unpredictable. Yesterday's winner stock is no guarantee of tomorrow's gains. Indian insight. Don't chase after trending sectors based on short-term news or past performance. Focus on systematic investing, like SIPs, rather than trying to time The Next Rally. Part 4. Behavioral Economics and Market Psychology. Chapter 7. Bubbles, Biases, and the Greater Fool. Investor emotions, fear of missing out, greed, or panic drive most bubbles. Smart investing avoids the herd mentality. Indian insight. Resist FOMO, fear of missing out, when everyone is talking about a stock. If you feel rushed or emotional, step back and review your investment plan. Part 5. Investment Strategies. What actually works? Chapter 8. Modern Portfolio Theory, MPT. Diversification. Investing in a mix of assets reduces risk and can increase returns for your chosen risk level. Indian insight. Allocate across Indian equities, bonds, and perhaps gold, rather than putting everything into stocks. Use asset allocation, mutual funds, or create your own mix, adjusting as you approach major financial milestones. Chapter 9. Index Funds. The Common Sense Approach. Investing in low-cost, broad market index funds or ETFs offers the best shot at growing wealth calmly. Indian insight. Start a monthly SIP in a Nifty 50, Sensex, or Nifty Next 50 index fund. For as little as 500 rupee per month, you benefit from the growth of India's top companies with very low fees. Part 6. Practical Guidance, Life Cycle Investing. Chapter 10. Building a portfolio for every age. Adjust your equity and debt mix as you move through life stages. Young, long-term investors can take more equity risk. Older investors should lock in gains with bonds and safe assets. Indian insight. For young Indians, a higher equity allocation, 70-80%, is often best. Gradually shift toward debt and gold as you approach retirement or major expenses like a child's education. Chapter 11. Asset Allocation and Rebalancing. Set target allocations and rebalance annually to keep risk in check. Indian insight. Indian markets can be volatile. Don't ignore changes in your asset split, rebalance, with partial redemptions or new investments every year or after large moves. Chapter 12. Taxes, Costs, and Behavioral Traps. Minimize taxes and fees. Don't panic sell or overtrade in reaction to news headlines. Indian insight. Favor funds and stocks with low expense ratios. Hold equity investments for over a year to benefit from lower long-term capital gains tax. Avoid churning portfolios, as taxes and fees can silently eat up profits. Part 7. The latest edition. New Markets, New Lessons. Chapter 13. Bitcoin, Cryptocurrencies, and meme stocks. Speculation in cryptos and trending stocks is tempting, but risk is extremely high and regulation is evolving. Indian insight. Crypto trading isn't regulated by SCBI. Invest only what you're ready to lose. Don't bet essentials on meme stocks or cryptos. Treat such bets, if any, as minor, satellite portions of your portfolio, never the core. Chapter 14. Why Passive Still Wins. Despite new opportunities and tech-driven trends, the best approach is still regular, patient investing in diversified, low-cost funds. Indian insight. Indian market cycles are shaped by both domestic and global factors, but time-tested principles, discipline, patience, diversification remain your best bet for long-term wealth. Consolidated Indian Retail Investor Insights. Don't chase short-term fads. Focus on robust, diversified investing rather than hot tips or trending sectors. Favor index investing. Use SIPs in Nifty or Sensex index funds. These outperform most actively managed funds over time. Diversify smartly. Balance equity, debt, and gold, especially as you approach key life milestones. Start early, think long-term. Compounding is your best ally. Begin today, even if with a small amount. Avoid costly mistakes. Keep expenses, taxes, and trading to a minimum. Use low-cost funds and hold investments for the long run. Stay disciplined, avoid panic. Market crashes are opportunities, not reasons to sell in fear. Be wary of speculative manias. Don't risk your hard-earned capital on unproven, super volatile bets or herd behavior. Rebalance annually. Adjust your portfolio mix as required. Growth brings you closer to your financial goals when managed properly. Your roadmap to financial freedom. If you take one lesson from a random walk down Wall Street, let it be this: you don't need to outsmart the market. You just need to participate in it consistently, wisely, and for the long run. Like, subscribe, and share your takeaways below. What's your biggest investment myth busted by this classic? Stay tuned to TradeInvestor for more data-driven audiobook summaries, investing masterclasses, and tools for your journey to true financial independence. Remember, the market may be random, but your discipline and common sense can lead you to lasting wealth.